Joining us to talk about the market day is Mark Lehmann. He's JMP Securities president, and still with us is Stephen Weiss. Mike, we lost that steam going into the close, kind of broke the pattern we've seen of the recovery last couple
sessions. We did, yeah. So obviously the little intraday rally did not quite hold together into the close. You know, I want to dial back a little bit and say the market is just a smidge higher year to date, which is 4 trading days. We came into this year, obviously, pretty much at a high, very strong year, very strong month, very strong fourth quarter. And the question was, do we have to cool off, flatten out, shake out some overly complacent sentiment? That's really where we are. You can almost take last Thursday's attack and the headlines out of it and say that's the process we're undergoing right now. New flows yesterday seemed like they wanted to buy the big growth stocks. They're still outperforming. But in general, I think we're just digesting what happened at the end of last year.
Mark, clearly we haven't had a resoundingly positive start to the year, but still holding up given some challenges. Does that make sense to you when you assess the various asset class opportunities for the year ahead?
Yeah, it does. I mean, I think you saw, like we discussed in December, that was pretty impressive. And going into the new year, I think portfolio managers assessed some news that we obviously heard over the weekend. I talked to a bunch of portfolio managers yesterday, and the resounding conclusion was, where else are you going to put money? And there's not, bonds are under 2 and commodities are interesting, but I think equities still are where more investors are going to place their bets. And we're seeing that this year, despite the bad news, the market's flat. I think that's a great result given all the conclusions of the end of the year where people thought we'd have to come in and go down. We haven't done that yet. I think that's impressive.
Mark, we have seen gold get a bit of a bid here in the last 2 days. Is that something you would look at as a hedge in your portfolio at this point?
I mean, clearly it's a safe haven trade. It's been in this range here for the year. If you're fearful of a big explosion geopolitically, obviously you want to pay more attention there. But that's been kind of a flat asset class, as you know, for a while. It's a great hedge, but I think there's more optimism than pessimism for the equity markets globally. And I think that's probably just that, a hedge. I don't think it's a place where you want to put a lot of your safe haven money right now.
Steve, do we gloss over a little bit so far the services PMIs that we got earlier today? Slightly better than expected. Nothing resoundingly stronger than expected, but important to see that part of the economy continue to hold up in light of still soft manufacturing data.
Yeah, I agree with that. And what's interesting about that and consumer sentiment, the other sentiment indicators, is that despite the headlines coming out of Washington, despite the harping between both parties, you continue to see the consumer hold up. Consumer data is good. The services, we've seen both disappointments and we've seen better than expected. So you really have to look at a trend on it. It wasn't that long ago the ISM was kind of disappointing, right? Missed a little bit. More of the focus is in Germany, in my view, when you look at what's called the recovery, where it's been very disappointing. So, look, the momentum continues here. I'm actually surprised we didn't have a little more of a sell-off because so many people made so much money last year, didn't want to sell last year and book those gains. So I thought they'd do it more in January, and we really haven't seen that.